I was wondering how many we will lose. So far, none.
The basic idea is that there's a groove that I can follow that's exactly right for exactly right for.
There's a lot to learn over these 3 days, and it's got to the point now where we're on the last day, and there's a lot to fit in, and it's feeling like, it's going to be intense. So prepare yourselves. So Fibonacci to start with, then we're going to go on to the negative filters, which is our indicators. It's the triad of price action, which I would love to have had a whole day for really, but we're going to fit in the sort of building blocks of it, and you'll figure the rest out for yourself because it's not that difficult. And then we're going to learn how to bring it all together with you at the centre and build that system around yourself. And it's not necessarily that you're going to walk away from staying, you're going to have this system set in stone, you're going to stick to it forever, but at least you have an idea of where you're going to start so that you're not sort of flip-flopping between one thing and another on a daily basis, but you can stick with something for a while, track like how you performed with that, and then if you need to tweak stuff, then it'll be very clear what part's not working for you at the time and switch over. Imagine you have two Uber drivers, right? We had one the other day who, in the morning we booked the Uber, and it was taking ages, we were like, what's going on? And he'd driven someone else, I think it was us, driven them all round, and he took 15 minutes to arrive. And we had to arrive here on time, obviously, right? The next day, the person came within 3 minutes. Now, out of those two people, one who came a direct route straight to us, and the one that went all around houses to get to us, which one are you going to put your faith in to get you to where you need to be on time?
The direct route.
Exactly. So, it's the same thing in the markets. If we have a situation where we have like this, it's direct, A, B, C, direct route, and you get the reversal from there, that retracement, that's direct, that gives us confidence. As opposed to A, B, and you still confirm the range, but it's going all around the houses before it gets to the D level. You can still trade this one. The Uber driver still got me here, I'm here, but it's just not as certain. You'll be a little bit worried about it. So it's that certainty that we're looking for. So the first one, we can put more into our position size, more at risk, and possibly a wider stop loss. Whereas something like this, you might want a tighter stop loss. Up here, you might say, for example, if it's type 1, then actually, if it goes against me at all, I'm going out of it. And if it's this one, you might say, if it goes against me at all, maybe I'll give it some tolerance for some sort of significant level that's there. So the 127.2 as well. Yesterday when I was saying one of the reasons why it'll be weaker sometimes is because the 161.8 is further away from the range. So that also means that the 127.2 will be stronger in situations when the retracement goes deeper into the range. So as in the other half of the range, so the lower side, below 50% before coming out, that's going to have a stronger 127.2. So if you had two exactly the same 127.2 reversals, but one had come with a retracement from the top part of the range, whereas one had come from deeper in the range, the one that goes deeper in the range is going to be a more dependable and bigger reversal. Like sometimes in the morning, if you haven't had a coffee, I don't know about you guys, but for me, I look at the chart and sometimes think, bloody hell, where do you start? Something like the start of this year of our Sunday technical analysis, especially because I know that 1,000 people are going to watch it, and you've got a blank chart and you're like, shit, where do you start? So in those situations, sometimes it's good to switch to a line chart because it removes some of the noise from the chart because you've only got the closing prices and therefore you can see things better.
We learn how to put the whole thing together, so Fibonacci levels, indicators, significant levels, and discussing different ways of applying the action what we've learned over the last 2 days. So yeah, it's been quite intense day.
What I basically do is conduct a fundamental research, which means I look around potential sources for information about the major economic indicators, what happened in the past weeks, what is due, in the week after, what has been the development of these economic indicators, and what are the likely highlights from a fundamental perspective that can help Nicholas in developing his own technical view for that.
I realise I've been using the value chart but I've been using it as a positive indicator, but I should have been using it as a negative indicator. So that's something that I'll definitely be able to take away from today.
But it's not just about using the range itself for that confirmation, because for example, if I've got double confirmation up here, I'm not interacting with that top of the range, but I know that I've got that range there. So if I set my stop loss the other side of it, it almost feels like I'm not risking money, because if that range hasn't been broken for a year and a half or now 2 years, and it's been broken once or like consistently for like a couple of times, and that was when there was something big happening. Trump won the election, something big happening, or GBP, US dollar, Brexit happening, like that kind of event. If I know that's the only kind of event that can break that range, talking daily chart, but obviously the equivalent for a 5-minute chart, you might say if it was only economic news that could break the range, then I know that it's got to be something similar to do it again. If I know there's nothing coming up that could potentially be that big, apart from natural disasters or something, then I've got something on my side which is extremely dependable that allows me to increase my position size. So it might be only one opportunity, but the position size that I can put on and the amount of TMP from that might actually be the same as 5 opportunities or smaller ones from a trending market. But that's why it's dependable for me, because I've got this backstop. I know there's something behind me. It's like when people get all tough because they've got their gang of friends behind me. That's me in the market. I know that I've got this gang of friends behind me and I'm getting all tough.
I think that you're really limiting your long-term success. Short-term you'll be fine. It's the difference between short-term and long-term is that you're putting your short-term needs and wants ahead of the long-term success. Because if you enter the trade here and that ends up being the crash of the summer and it goes 1,000 pips and you've taken 5, you know, because part of these trades when we have our risk reports or whatever, when we do our 3-to-1s and stuff, we're banking on it. Sometimes you're going to get that bit more. If every time you get 3-to-1, your success rate has to stay consistent, and if it drops even for a few weeks, you're starting to lose. If you're letting trades run when it's got the potential to run, you're reducing your need for a higher success rate, so your success rate can drop. I remember when we look at risk, it's a combination of all of those.
You know how I think in this, or I used to think is, I'm start with 3-to-1 to build capital and confidence, and then when I have more confidence.
I think that because I now have got to know your analysis and the way you approach things, your analysis is good. There's only sometimes that it needs to be changed. Your ability to stick to a plan is very good, but I think now you need to realise that that ability that you have should give you the confidence to know now you can give yourself that little bit of flexibility with letting things run rather than being rigid and cutting it, just letting a trade have to breathe, have that space to actually have its potential, like to fulfill its potential. Like you could be a smothering mum that's like forcing your kids to do things, or let them have their freedom. The same thing with the trade.
I learned a very important thing is getting as much screen time as possible, getting behind the charts. I learned so much just doing so much work in these last few days. I've got quite a busy work schedule normally, so I only do a little bit here and a little bit there. But just by getting a lot of screen time these last 3 days really helped a lot.
Yeah. Technical analysis on Sundays, as much as I hate it sometimes, it will make the difference now that you understand the reasons behind everything. And I'm always available by email, but just not that necessarily that often because I get bombarded. We hit today 9,000 subscribers on YouTube, and if you imagine on Boxing Day we hit 4,000. We're over double since Boxing Day, so my email inbox is constantly like blowing up at double the amount. So it might take a while to get back to you. For the guys that contact by email, obviously with the forum it's the same kind of thing, but with more detail and sharing posts and stuff. But I will get back to you, so feel free to use me. Anyway.
For the D.
Not for the D. So thanks guys, and I'm going to stop talking now and hand over to Sandro. Do you want to say a word? And then I'll be around for questions and stuff after, but I'll be sitting down at the back to rest my weary legs.
Somebody asked me, why do you guys do all this? And it's very simple, because when you come from a background like Nicky and myself, and you realize that you have a talent, you need to nurture it until you pass it on to someone. We had to go back to our values, we had to go back to our roots, and this happened last year. Where we said, what we are really about is to help people like us who genuinely want to learn, in this case, learn to trade. On behalf of Nicky and myself and the rest of the team, a big thank you. Keep putting in the discipline, the hard hours, was you first need to learn. And only once you learn, you can start trading, and only then you can start earning to achieve the goal that each one of you has set. So, a big thank you to Nicky there. I'm sure he's looking forward to.
I was looking forward to this bit, and I've got it now, so I'm happy. Sit down.
What I've learned most out of the last 3 days is patience, consistency, and getting out of your own way.
One thing that I think everyone here probably realise now is that, and what you might not realise at the start, is that it is available to everyone and it can be done.